Sunday, April 27th, 2025, option review video. Hope you're having a great weekend. And we're looking at the SPX chart for the daily, weekly, and monthly. And you can see a very nice recovery. And I'm not going to cover too much of this side of things since it's covered on the SMM side, but it looks like we're looking to fill this gap right here on the daily. And I think we're going to run into a bit of trouble here at the 50-day $5,600 level. So got a little bit of work to do here, but very strong recovery. Looking like this may have been at least the bottom for now, but we are quite overbought on a lot of time frames and should see some backing and filling. I think we'll see some of that this coming week. I've got lots of economic reports to derail things, including PCE on Wednesday and then the non-farm payrolls on Friday. You can see the weekly here holding this 100-week moving average and heading for the 50-week moving average. Nice weekly candle here. Weekly MACD looks like it wants to flip over just like the daily did. And on a daily and a weekly, we're nowhere near overbought in terms of relative to the strength index. Look at this tail on the monthly, really long coming down here. And it'll be telling if we can close this month positive, because a positive April portends better things than a negative April for the rest of the year, so to speak. And you can see here that 5611 was the close in March. So we need a close above 5611 to close April positive. And we have 3 whole trading days to do that. And I do think that that is definitely possible. We'll see how things go for the next couple of days. NDX, stronger recovery, looking here at this ATR trailing stop as resistance, and the blue line being resistance on the 50-day. Look at this candle, very nice red, green kind of bookended candles. And we can see here 50-week moving average, this blue line here up there near the $20,000 mark. And that happens to be the upper edge of the expected move for this week. The long tail on this monthly candle is a green one so far. So it looks like we are into the March candle. 19,278 was the close in March, and we're at 19,400. So we're good to close April after all the drama in the green if we hold up for the next few days. And as you can see here, we had a crossover on the MACD on the monthly, and we're still pretty negative on the MACD and the weekly. We have to do more work here. Of course, the daily MACD is pretty positive and has been for days. So really nice look for things. And then just for kicks, let's take a look at the RUT. Not as good looking as the other 2 indices, but also improving and looking better. We have the options applied expected move up here at 2016 for this week. You see the entire range. And on a weekly basis, weaker than both of the NASDAQ and the S&P index here. You've got this coming up against an 8 EMA on the weekly first point of contention. And then worst of the 3 monthly candles here, since the small caps have been pretty weak so far. And to show some positivity, we need to close above 2011. That's a mere 54 points from here. So got work to do. And if this VIX can continue its dribble down, as we've seen for the last 4 days, with a definitely negative MACD, then we're going to be in better shape. We need to start seeing the VIX to trend towards 20, its long-term moving average, and a close below the 50-day would be good sign for the bulls for further gains ahead. Taking a look at the expected move for this week, we can see that it's about 148 points. Let's make sure Yeah, 148. So let's call it 150 points with PCE and non-farm payrolls this week, and lots of Mag 7 earnings. So 150 points is a lot, less than the 168 last week. So it hasn't come down much. So volatility is hanging in here. But I want to show you is that let's take a look at the VIX futures contract since we're option traders, and you can see that. The backwardation or the pricing of the far dated VIX contracts are less than the current. So we have a backwardation structure where the current and the most recent VIX level, including the spot VIX over 25, um, is bigger than the VIX and the outlying months. And obviously, with more time, you should see more volatility. So we need this for the bulls to reverse, and it's slowly coming together. But we are in a position of backwardation where each contract is still less expensive as you go out in time. So the immediate risk is towards here. And as I said earlier, we've got a bit of overbought situation. So I would expect some backing and filling this week. I certainly wouldn't be jumping in at this point if I'm out, or be waiting for a pullback to add to my exposure. Taking a look at the VIX options, as we often do, let's take a look at the next monthly expiration. We're at 24.84 on the close on Friday for the VIX. Let's call it 25. Look at the VIX calls are pricing, call it $1.66 for the calls, and going out a point to the puts out of the money, you can see that these are pricing at about 261. So slight advantage to the VIX bears rather than the VIX bulls, and what that means is that the skew is slightly in favor of the market bulls here, since the calls, you buy calls when you're bearish, and if the calls are pricing less than the equidistant puts, it means that the bears or the buyers are favoring more downside for the VIX, which implies more upside for the market. Hopefully they're right if you are bullish. Let's take a look at the trades that we have on, and starting and going in alphabetical order. So starting with AMD, we have a short long dated put in June. We took our first profit target on there, 60 cents. We sold these for $1.54, and so far they're at 43 cents. So we are up nicely, 72.08%. And finally, AMD is getting back out of the basements of the above the 21, and is going to contend with the 100-day moving average. And this one has earnings. Let's see, on the 6th of May. So that's coming up not this week, but the week after. So if the market stays strong, AMD will certainly move up, and we need to hurdle that 100-day moving average, the $100 level, which is the 50-day moving average, and then this ATR trailing stop at 103.84. And if earnings weren't so close, I'd be looking for a more bullish play on that one. Costco, one of the ones that's held up very good. Is it a consumer staple? Is it a retail? Is it a technology stock? Who knows? But you can see here that this has been going sideways. We have a put spread that we rolled out to August when Costco started getting into a bit of trouble. And we are up a whopping 3.5% on this roll. And Costco options are a bit wide, so the pricing can be a little funky after hours. But suffice to say that we kind of came back from the brink on this one. We rolled it out just to be safe, but at this point, we just hold on to it. And Costco is one of the better performing stocks in the market. Decker's Outdoor, this was another put spread sale, a May 95.85 put spread. We're up 66% on this, and we sold these for $2.05. So our first target was 105, and at 102, I should say, that's a 50% profit. So hopefully you took some of this off of here after this video. I'm going to put in a price target for this that we reached at least 50%. And you should do that when you have multiple units in a market like this. You don't want to hold on to all of them. And hopefully you've kind of unloaded some of them if you have multiple units and taken the profits on this. So Decker's a nice slow trade. You can see it's going sideways. It hasn't really had the bump that a lot of the stocks we've seen. And even on Friday, when the market was up, it was just down a buck 46. MACD is positive on the daily, and we're not overbought at all here. So nothing going on. We'll just take what we can with Deckers. Lift, getting a lift and above the 50-day, wouldn't you know? This is our slow trade, another put sale in June. It's the 10 put, and we are massively unchanged, as they say. 0% on these puts. So we sold them for 47. We're at 47. Beats being down 60% as we were. And so nothing to do with this one, but hold it, and we can see a positive MACD and nowhere near overbought on the RSI. For NVIDIA, we have two plays. One of them was a far out of the money put sale and a combo sale, deal. So here we sold the June 65 puts for $1.01, and we already took one profit target on it at 46 cents, so that's better than a 50% profit. And now the rest of them are pricing at 23 cents. As soon as we get a pullback on this one, I'd like to see if I can roll these up and catch a little bit more premium and keep this going, since NVIDIA has earnings far, far away from now. And even though we won't collect as much because the volatility has come in quite a bit, we should see it coming up to the 50-day and probably struggle and pull back from there. And if the market overall pulls back, this will be good for our puts. The combo play, which is a January play, we've taken 4 price targets, and I'm going to start slowing down kind of on these because we have a long time to go here. And I don't want to be a sold out bull with these. As you can see, it's 100, 125 call spread, and we did that by selling a 75.50 put spread in January. So lots of time. We've been taking 1/8 position profits. I wanted to take something this week in case we got a pullback, but I'm going to be slowing this down a bit because we have potential for a $25 wide spread, and I want to try to get at least about 50% of the full width of this and let this ride for a while and see if it can't pay us pretty well. So NVIDIA doing better along with the rest of the market. QQQs, another one where we have 2 plays on. One is kind of an old play that we had on, and one is a more recent one that we put on a straight put spread for 420 put spread. I shouldn't say straight because we sold the July 360 put as well. And we did all of this for about 45 cent credit, 45 cent debit. And at this point, we're down 166.7%. Now, I know we took a couple of profit targets here. I'm not sure why it's reflecting. I'll have to check on this, but we did take a couple profit targets on it. And I know we're underwater, but I think that if the market pulls in, then these will be okay. And plus the fact that we have the short 360 put is going to help us. And if this spread expires out of the money, then we still have that put to kind of help us chew away at that premium lost on these. But we did take a couple profit targets. So I have to update this. I'm not sure why that's showing gray here. Next one is the QQQ. This one is the remainder put from our previous inflection point spread. This is the June 30th 420 put, and this June 20th 420 put. Let's see, it's pricing out at about $5.62. So still has some time to come down, but at 420, where the QQQs are at 470. We got lots of room between this and that. And if we can get the VIX back down to 20, I believe this will collapse enough to get this particular play back to break even or to be positive. We did take a couple of price targets on this when we had them. So, but for the rest of this, we're just waiting on this put to kind of decay. SDGR, let me put up the stock, not the option itself. Kind of meandering, really just going sideways, doing nothing, which is not great for our spread. But this one is a January spread. We've got lots of time on it. So we've gone nowhere, but it hasn't really done anything wrong as of yet. So we keep it a little down, a little up, and then a little bit back up. So it's really just biding its time a little bit. And we have plenty of time in this. So down 9.9%. But it looks like this MACD wants to come in for a little bit, and we're not overbought on the MACD, but we may be looking at a rest here unless we can get a little bit of energy. But SDGR, long dated, we've got plenty of time on this. SPY is another one where we have a couple of plays. One of them, again, is the remainder short put that's long dated. It's the 505 put out on June 30th. We're down pretty much on this one. And if I take a look for this particular one, come on. There we go. So it's pricing out at about $6.79, and lots of time for this to come in, assuming that the volatility continues to collapse. With this one, we were only able to take one profit target on the call spreads before it expired, and so we're counting on this put, which is far dated and far out of the money, to help kind of bail out this trade and give us some bullish energies for our trades. I mean, this is a bullish trade at this point. It started out as a bearish one. So as the market goes up, as volatility collapses, this one will continue to improve for us and get away from this ridiculous and really meaningless minus 3,563% downside. The other one is another put spread where we had harvested the entire put spread and we took some nice profits on them. And now what's left is a July 440 put. And this July 540 put, let's see if I can bring it up. 440 put. It's worth about $3. And let me make sure I'm not confusing the two. Yeah, that's the 440 put right there. Yep. Okay, we got it right. And so this one is starting to decay in our favor, and we are a long ways away from that 100 and something points. We just need time and decay to help this particular trade fade in our favor. And again, if the market wants to continue up, that's going to be good for these puts because volatility will continue to collapse, and these puts, as the market goes up, will become worth less and less. But they are far dated. This one and the Qs are far dated puts. And therefore, they're going to hold their premium a little bit better. And we also need to see that the skew kind of comes in a bit as the market comes in and allows these puts to kind of lose a bit of their value. But lots of time on them, lots of distance, nothing to do with these except let them kind of continue to reward us for holding them. TLT, after a bounce up and downside, we're bouncing up again. So this is doing what we love to see happen with puts, and that is for the puts to kind of go sideways and not do anything. Our puts, which we've rolled a few times, and this time out to August, I think we have the August 85s now. We're down 22.5%. Nothing much to speak of. We are at least $3.89, or exactly $3.89 out of the money. So it's not much to worry about just yet. Bonds are doing okay. They've seen a bounce over the past week, albeit kind of ugly one as of Wednesday, but looking a little bit better. Heading up for this 50-day. Not sure if the 50-day is relevant when it comes to the bonds, but there you are. We put on one new trade last week, and things are looking better for more new trades coming up, and try to fill things up here. But we have 13 trades with this UNG trade. We bought a put, we bought a call, and we sold a put, and we did it for 12 cents. And so we are looking to make a buck on our first tranche, and then $2 on the second tranche. In this case, we have a bit of time, not a lot of time. That was on purpose, but we could easily get up to 17 and make a couple of bucks on this trade. Counter trend trade, down 30% from where it was, and worth a shot. And so we're already up 100% on this. How do you like that? When you make 12 cents, you're up 100%. And again, a reminder that you don't have to wait for me to signal when to take your own profit targets. You can do that on your own. I set a stop on this somewhere. Let's see where I put it. No, it's not in the text. But I think I put it down below one of the swing lows that's it found support on, maybe around 14. You'll see that in the system. Well, I should have it right there at 14.1%. So anyway, UNG starting out good, and we'll see how well this does for us. For this week, lots of economic news, lots of big tech earnings. So I expect more volatility. I don't think we're out of the woods just yet. The backwardation in the VIX still tells me there's a risk in this market. The fact that we've had 90% days in the last 12 trading days would scream that caution is somewhat warranted. We are overbought on a lot of time frames, so I would not be surprised at any pullback, but I think it's going to be a pullback that they buy. And if they really want to get April positive, and I mean the big portfolio managers, and squeeze the shorts some more, I think that certainly can happen. But I would think that at some point this week, we're going to see a pullback. So I would not be chasing anything here. And I'm going to be a little bit cautious about putting on some new trades. In fact, I almost put on a new hedge last week, but I held off since Friday looked so strong. Well, that's all I have for you tonight. I hope this video was helpful to you. If you have any questions for me, Trader Geek Sam in the forum, or at Trader Geek on Twitter. Give me a follow if you haven't, and invite your friends to join us at Option Market Mentor. I will talk to you tomorrow. See you in the room, and enjoy the rest of your weekend. Bye-bye.